Hey guys, Mike here. So obviously the PCE data came out for inflation. This is the report that the Fed likes to use because it backs out energy and food. And I'll go into more detail on that in just a minute and why that's important. But of course, you might notice it was a very big green day today. The indexes were up huge. A lot of stocks were up double digits. And this is what the market was reacting to. And you can see by this report here where I'm circling where it says 0.2 under April. That is the smallest increase we have had on this report, right? I mean, last month it was 0.9, before that was 0.5. So the market said, oh my goodness, maybe we're peaking, right? I mean, that's a good sign. As you can see, goods minus 0.2, services, which we mostly are as an economy right now, 0.5, which comes in line where it's been increasing every month, it looks like. The funny thing was in this report, if you look where it says energy, goods and services, minus 0.28. I thought that was pretty interesting right there, to say the least. But this is what the market's reacting off of big today. But let's go into why it's good and why it's might be bad, obviously, right? That report is good. People think, hey, Mark's saying maybe we're peaking, maybe we're slowing down yet, right? Could be an anomaly. You gotta wait to get another month to see if that's the case, because it could pop right back up. And I'm gonna show you a little bit what I'm talking about here, because remember, it backs out food and energy. Why do they back that out? Because they can't control it. They have no control over food or energy. And so that's why they want to look at the core, they call the core of it, the stuff they think they can control, right? But food and energy, the thing is, people are looking at that number and they're thinking, well, wait a minute, this is going to be great because regular inflation data should come down too if energy came down and stuff. And you think to yourself, well, let's look a little more in detail. And one thing to think about, the reason why food and energy is so important, and I know they don't count it, but the reason why it is so important, because that's what's taking money out of our pockets, right? Remember, we may make up this much of the stock market. We make up 70% of consumption. I'm talking about normal, everyday people. All right, so they need us to go out there and buy stuff. And as long as it's way more expensive, we can only buy less, and it will continue to eat into everyday American savings accounts. That's what's going to happen. And I'll show you what somebody says at the end of this to get you another word on what's really happening and what they're projecting to happen with energy and food through the summer and the rest of the year. But just to give you a visual of what has happened already, and if you're not feeling this personally, I'll be very shocked. But this is the 12-month CPI ended April 2022. There's inflation. Look where food's at, 9.4. Look where energy is at, 30.3%. A lot of people are traveling this weekend. They're definitely going to feel it when they're filling up their car. And then core inflation, 6.2. Obviously, you're backing out food and energy. And just look at this visual right here. Look where food used to be as far as inflation is concerned. It's under 2. You don't notice it, right? Then 2020 hits, but look at this. From 2020, we're 2.5 times, food is 2.5 times more expensive than 2020. Almost 4 times more expensive when you look at 2012 to 2019. I mean, if you're not feeling that, when you look at your credit card statements every month, I don't know what to say, okay? And here's the problem. Here's why inflation data coming out in June is going to be very interesting for me, because look at what happened to gasoline. In March, at the end of March and April, guess what happened? It went down. But look what's been happening all of May. It's skyrocketing, right? So that's what we're going to be getting for June's report. Then look what happened to oil. Same time frame, right? Ends up spiking up in May. But you can see April was lower than May and it actually decreased, right? Look at this. There's May. But then look what there's April. But then look what happens in May. It just takes off, right? And so again, going to the moon again, right? Then we look over here, natural gas. Natural gas is just, man, been on a tear. But if you look, here's March right there. April spikes up, then comes back down. And then look what's happening in May. Much higher than it was in April. Look at that. Just straight on up it goes. And again, don't forget to hit the like and subscribe button if you get something out of this, guys. And so hopefully you get a visual of why inflation data coming out in June is going to be very interesting to see if it actually is plateauing or not when you see energy doing that. And then I'm going to show you what's going on with food in just a second. But I wanted you to hear this guy speak. I always like to bring other opinions here. At least you get a look. But, you know, the guy raised very good points about GDP, about inflation, what the Fed can and can't control, rates, recession, everything else, and I actually agree almost cold-heartedly with him on everything.
There are two things that they can't change. They can't change the global supply problem for hydrocarbons, which has been based upon, call it, a decade of bad policy. and they can't change the price of food. So we're going to see energy and food prices march higher over the next year. And we're going to see the economy cool off. And you already see Fed Funds futures telling you that they're going to have to cut rates sometime in mid-2023. And I agree with that.
You do agree with that. So, yeah. I mean, I guess for a lot of people, they would say, well, wait a minute, why bother raising rates just to cut them again? So do you think they should back off now? Or is the risk that, you know, the market's so quick to change narratives that they'll kind of signal to the Fed that they ought to be more dovish at the very time? I mean, we're still so far below neutral. We're way below neutral. Nominal GDP is still strong, like you just said. There's going to be this food and energy imbalance for some time. So explain what you think the Fed should do here.
Well, when you think about neutrality in Fed speak, when you look at what the minute said yesterday, the Fed staff still believes that we're going to have a 2.8% GDP growth year in 2022. You know, I just don't see that happening. You have Q1 at minus 1.4. You'd have to average the next 3 quarters. Will have to average over 4% growth to hit the Fed staff's target of 2.8. So that's just not going to happen. So I think that we're in a scenario where we have a stagflationary environment. I think the economy is going to cool off, and we will have I think we'll have a recession by the end of this year or the beginning of next year. And we'll still have rising food prices and rising energy prices. And unfortunately, the Fed's monetary policy just can't change that. I believe that the amount that they can raise rates is indicative or kind of anchored in the delta from the base and not necessarily equalizing it with, quote, the neutral rate. So I don't think they're going to get much over 200 basis points in hikes before they have to pause and turn the other way.
And there's a couple of reasons I agree with him on the food part. And if you look right here, just look at wheat. Look at the prices. I mean, you think they're going to come down, but look at where they're at. I mean, that is unsustainably high, right? Look at corn. I mean, goodness gracious, look at corn in September. I mean, just on a March, when you don't think it can get any higher, it gets higher and higher. And why are these two in particular important? Because we use them for so much stuff. Look at wheat. We don't think about it. We make bread, crumpets, muffins, noodles, pasta, everyday thing, right? Pastries, you name it, cereal, snack bars, and corn. Look at corn. We don't just consume corn as human beings. We feed it to hogs, chickens, cattle, right? It's in corn syrup, ethanol, bio-based plastics. I mean, it's in so many different things that we don't think about on an everyday basis. And this right here came out today. This is the Michigan Consumer Sentiments. I want to throw it in here. This is why sentiment is in the toilet. This is why it's sitting there. Again, this came out just today. And the reason why? Inflation. How much we're paying for food and gas at the pumps and stuff. People are pissed off about this. And that's why you see it hadn't been at these levels since 2011 and 2008. Right? When we thought the banking system was going to go under, for God's sakes, and millions of people were laid off. We hadn't even laid millions of people off yet. We aren't even in a recession, and look where it's at. It's down there already. I mean, that is, ought to tell you something. And the reason why corn and wheat most likely won't come down anytime soon, dramatically that is, because of Russia and Ukraine. They're just big exporters of both. And the truth is, I don't even know if they planted this year. I don't know if Ukraine got a chance to plant, right? You can't just plant it anytime you want to. I was talking to my brother-in-law about this. He's a farmer. My wife's family, they're pretty much all farmers. Some of them are huge farmers, some of them are smaller farmers. But he was even saying that most farmers didn't plant as much as they would normally would because of the higher input costs, because farmers aren't price setters. Okay, so every extra increase in those input costs cut in their margins, and it's already a very low margin business to begin with, from what he explained to me. And so if a lot of farmers didn't plant as much as they were supposed to, as much as they did last year, that's less crops coming in, right? And then you already have, I don't know if Ukraine planted or not. If you know, let me know in the comments. I don't know what Russia was doing, because their trains are being used for something else besides helping farmers out right now. And so it's just an interesting time to see, but I can't imagine those are going to be coming down anytime soon. And I showed you what we use it for. So we'll see on that. And, as far as I've seen a chart today, it was projecting oil going to 147. And I saw what AAA and all the rest of those folks were projecting gas to be. And we're coming into a really big season, so I don't know. We'll see. We'll see if demand destruction ends up bringing down the cost or not. But that's kind of where we're at. Something to look into. And if we have these prices for long periods of time, even if inflation peaks, right? Because the market can go up. The market and the economy, we've seen it. They'll separate themselves, right, at some point in time, and you'll see the market go up. even though, you know, our consumption might come down, even though inflation has peaked, but it stays really high for a long period of time and drains our savings accounts and takes money out of people's pockets and creates demand destruction across the board. You know, it's going to be interesting times to see. But yeah, if we go into a recession, that's when you'll know you're going to get to see the low in the market. That's because that's when the market should absolutely fall off a cliff, when we officially announce a recession, even though we've been in it for 6 months. But I'll do a more detailed video on that. But you know, the good thing is we broke the 7 straight week, or 7 straight week sell-off, excuse me, which is good. I did a video yesterday of, you know, here's some data showing we could have a 7 to 14 day rally. We could. I don't know if it's going to continue next week. It's going to be a short week, but you know, we'll see. Again, I'll link that video at the end so you can watch and understand why. It may not happen. This is a very unpredictable market, but a lot of things may point to that. We'll see. You know, but on all serious note, I want to say, obviously, you know, it's Memorial Day weekend. It's where we honor our fallen heroes who went out to battle. You know, and if it wasn't for them, you know, we wouldn't get to enjoy all the rights we have, all the freedoms we have, right? And so my heart goes out to the families. I'm coming from a big military family, so we got plenty of fallen soldiers in our family that fought in many different wars. And so, you know, I salute all veterans. God bless you and love you guys. And for those who didn't make it home, you won't be forgotten. I promise you that, okay? And so hope you guys have a safe Memorial Day weekend. Please be safe out there, especially if you're on the road, and I will see you guys later.